Your house is worth whatever it's worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. So be out there viewing. Pay attention to the back of the class. If you've not been watching my videos, I did one just a couple of days ago. Disregard the guff, guys. Surprise, everybody. This is an impromptu last-minute decision to live stream because I'm sitting here with Alex, housing Stig, because we just recorded a video that I'm going to be putting out soon, which is how to find out exactly what's happening with house prices without reading the news. And we thought, why don't we just go live and see if anyone wants to have a chat?
And I've been plying myself with your red wine, so
Yes.
yeah, that seemed like a good plan.
Alex has drunk a bottle of my red wine, so I thought I'd get my money's worth. Good evening, everybody. Good evening, Paddy, Super Ted, Regina, David, Mr. Beats. So, fire away with your questions. While I wait for a couple of questions, if you've got them, let's just recap. It's been a busy day for numbers in the housing market. So this morning, the Land Registry confirmed that January house prices in the UK fell on average 1.1% from December. Now, let's just stick with that because you've got some interesting theory on this. You think that that's only 6% of transactions make up that number? Because that's less than Halifax.
Yes, I mean, the Land Registry release their data on the 20th working day of each month, which means we're going to get, on the 28th of March, we'll get the first tranche of the February data, right, and we'll get another big set to back up the January data, and also December, right, November, and so on and so forth. But I'm looking at these numbers, and the Land Registry are now so behind that the amount of transactions in January, either that's a roughly 6 to 10% of all transactions, or transactions have fallen off a cliff by 80 or 90%, which is not true. Yeah. We know they haven't fallen that much. We know that people are still buying. So yeah, Land Registry is just a long way behind. They did say they were going to have a strike. They, they weren't going to update. They've admitted that there are certain things they won't get to for 2 years.
So okay, so basically what you're saying is we can't rely that much on that figure. It's going to get revised.
Correct.
Okay, so that's house prices are down. The other big news that came out this morning at 7 o'clock or 7:30 was inflation. It did surprise everybody. I wasn't expecting to go back up.
No.
I mean, you and I share a view that it's going to remain stubbornly high.
Sticky.
But getting back up to 10.4%, that's 0.5% higher than expectations. And that's caused a problem for the Bank of England tomorrow, I reckon.
Well, we had the conversation last week, and I said at the time that I thought, given the banking crisis, that now both the Fed and the BOE would take a pause, take a breath, not stop interest rate increases, but pause them for the moment so they could see what's happening. Obviously, the Fed today did not. They increased by 0.25%, and the Bank of England tomorrow will do, I imagine, the same thing. And that's all down to inflation. And like you, we discussed, I've seen lots of deflationary things. One of your audience members, Patricia, has lots of really good data. And she sent me some information about...
Hi, Patricia.
Hello. She sent me some information about China and all of the containers that are sitting empty.
Right.
And you look at that, and then you look at housing transactions, you look at mortgage approvals, and you think, well, that's more recessionary. This is not inflation. Yeah. But what I hadn't counted on, food and alcohol. I mean, it's gone through the roof. Restaurant prices increasing. Yeah. So yeah, I wasn't expecting an increase. Certainly not.
So house prices are down, inflation is up, inflation rising certainly doesn't make it any easier for house prices to rise. It's going to be, and it's going to give the, I mean, let's have a little imaginary Bank of England policy. Good morning, Alex. So we've got to make a base rate decision today. I know inflation's really high. Let's put them up. Oh no, hang on a second.
You can't. You know,
There's a
you can't do that.
crisis.
Banking.
No,
What
let's
about
put them down. No, hang on a second.
No, you
Is there
can't do
inflation
that.
rate higher?
Oh,
Wait, hang on,
we're fucked. I just, yeah.
hang on a second. Wait. Maybe the safest thing to do then, probably. Oh God, what can we do? Because we're fucked if we do, fucked if we don't. And
No, we can't keep them what they are.
we can't go where they are because then we'll be.
We'll look like we don't know what we're doing.
Yeah.
Oh my God.
What's the market expecting?
Well, it expects them to go up.
Well, why don't we just make the market think that they were right, and let's just do what they think.
The market do like it when we
Yeah.
make them think they're
The
right.
market like it. Okay, so if we make them up, so the market's thinking 0.25%. Is what it's priced in, isn't it?
Yeah, I think so.
Yeah. Let's just do what the market says then.
That's a bloody good idea.
Right. Okay. Interest rates are going to go up 0.25% at the Bank of England. That's the decision made. That's pretty much how the conversation's going. Because they have an on-the-record conversation, don't they, beforehand? Sorry, it's a recorded meeting.
Oh yes, it is. Yeah.
I reckon they have a little meeting.
You mean the
Just-
anti-chamber meeting where they
Before
go,
they go into the meeting, they
"It's
go,
fucked. Don't say the word fucked."
Don't, whatever you say, don't say that. But we are.
Oh dear.
Thomas Moran asks, evening, what does Stig think that inflation really is currently?
Oh, well, obviously,
Short answer.
higher than they are reporting using CPI. I mean, probably around 16.
Well, Paddy O'Shaughnessy says true inflation is at 17% approximately.
Oh, okay. Well, I wasn't too far
Yeah,
off.
pretty close. Any other questions right now? Okay. Right. So I've just seen the thing saying I'm not loud enough. Oh, it is.
Oh,
actually
that's
angled towards you as well.
that's just because I'm drunk and shouting.
Hang on a second. Let me just twiddle that around a bit as well. That will help a bit. Is that better, guys? Audio a bit better now? Okay. So, right. The Fed also raised its rates in the US today, and they did exactly what we've just described, didn't it?
Yes.
Let's just do what the market thinks. It's probably the safest bet. It's the least dangerous option.
Well, and also they're coming out with all this rhetoric about how SVB was very unusual. They hadn't hedged their risk, and therefore it's all contained. This is all going to be fine.
And just a quick moment on the banking crisis sort of went a little bit calm, a bit quiet, and then I saw something. I haven't actually looked at this evening's news on Bloomberg or anything for a while. That there are somebody prominent came out and said 12 to 24 months from now, there are a lot of banks that exist today that won't exist.
Yeah, that's fair. I assume that was a US pundit.
Yeah, it was a US pundit.
Yeah, because America has, unlike Europe, where we have relatively few but very large banks.
Yes.
In the US, you have lots and lots of different types of banks and sizes of banks.
Yeah.
And they will be consolidated. We will end up with a much smaller number of banks in America, but they will be huge and they will have a lot more power. People are moving their deposits for no good reason, apparently. Are you advertising?
It's alcohol-free punk IPA, which is, as alcohol-free stuff goes, it's. You just keep enjoying my wine.
It's not alcohol-free. It's fantastic.
Right. Okay. Okay. Philip Reynolds asks, when looking on Rightmove, I included in my search sold subject to contract from mid 2022.
Mm-hmm.
And despite what's going on now, it still looks like you got more bang for your buck then compared to now. Thoughts? Asking prices don't equal actual prices. Even the sold subject to contract stuff is displaying.
What type of houses is he looking at? Because if they are detached houses,
Yeah, that's true. Good point.
then I agree.
Yeah.
At the moment, there is still a massive premium on detached houses, at least in the asking price.
Yes, exactly.
And until we get land registry data, we won't know in the actual price whether that's reflected.
Yeah.
But right now, anyone who's got a detached home thinks they can sell it for moon dust. It's
Okay. Paddy O'Shaughnessy said Powell, who's the Fed chairman, was hilarious in the Q&A. Honestly laughable. Sorry, guys. This was unannounced. This one. So sorry. Anyone got any more questions? So come on. What are your questions, guys? Questions about And what do you guys think is going to happen Bank of England tomorrow? Any of you got predictions? I just a lot of the downturn deniers, as I call them, have been very quiet today.
Well, that's not surprising.
Very quiet.
Inflation, according to them, should have been 9.9 at max. I had friends telling me that inflation was going to be coming in at under 9% today.
Yeah, really.
And bear in mind, they've been listening to their UBS bankers.
Okay, this must be someone new to the channel. Sarah Elaine says, buy or wait for better prices. And what I always say is, I don't know what your reasons for moving are, but if you're not in a hurry, if you don't need a home, if you've got a comfortable home where you are now, and you don't have any sort of imperatives to move, then waiting on average is going to get you better prices.
Yes.
Patience, I think, is a really powerful virtue in this market. If you are a buyer, patience. Historical average, someone's talking about. Okay, a quick point on this. Someone said, isn't the historical average around 6%?
It depends. You can go back to the 1830s, and for 100 years, the historical average was 3.9%.
Okay.
You then had, after the war, you had a very turbulent period, which sort of lasted, so from the 50s through until the early 70s, the average was 5.4%. And then you had 11.4 from 70 through to 90. And then 5.4 through from 90 to 2007. And then since 2007 up until last year, you had 0.25 or whatever it was, something like that, 0.25%.
0.25%.
But I've got lots of, if you look at my account on Twitter, you'll see the graphs where I break it all down.
So you can find Alex on Twitter, just Alex Groundwater. Just search Alex Groundwater on Twitter and you'll find him, and look at the graphs. And his graphs will answer most of your questions. He'll show you historical interest rates and stuff. It's interesting. And we were discussing on the video recorded earlier about how 5% interest rates, the last time that they were 5%, house prices rose. But that's because wage price growth was high.
We had
now we have wage contraction.
Exactly.
And that's why they're going down. Yeah.
If you looked between 1995 and 2007, when the last big boom and then bust happened, average interest rates were 5.4%.
Right.
So as high as they are now. But wage growth over that period was 36%.
Yeah.
At the moment, wages are contracting. Yeah. They are 4.5% down using CPI inflation.
Negative 4.5%. Yeah.
From October of last year. That is not conducive to house prices increasing.
Got a question from a renter. How will the next interest rate affect the rental market? Well, very roughly, I want to keep this super simple. Landlords without mortgages are completely unaffected by interest rates. Landlords with mortgages that aren't fixed are very badly affected by interest rates. Mm-hmm. And so the higher interest rates go, the more mortgaged landlords will be selling up.
Yes.
And that will affect the rental market by reducing the supply of rental properties, unless cash landlords buy them, of course. And hopefully that's what's going to happen. Because
the average age of the landlord in the UK is 55. And there are a lot of landlords that have no mortgages or loans on their properties.
Do you know that's actually a landlord that you want as a tenant? Because you're at much less risk of being asked to move out.
Well, for people who followed you, and you know that I was having to renegotiate rent, and I was particularly worried because looking at where I live in Putney, rents had gone up by almost 50% from when I first started renting there 10 years ago. My landlord, 78, I don't know, mid-70s, ex-GP. I don't think he has any mortgage on the property. I think I've paid that off over the last 10 years of living there. He has given me an increase of 4.25%.
Amazing.
And bear in mind, that is the first increase in a decade.
That's incredible.
Because for him, he doesn't give a crap. He's got a good tenant who pays him every month. And he was actually quite sheepish when he said, would you mind, and if we just an extra, I'm like, no, John, do you know what? That's thank you very much. Very happy with that.
Good question. Greg Robson says, when does downturn denial properly end? I've seen my target purchases stick around the 200k mark now. What future events might help people see the truth, as it were? I'd say when the job losses really start coming through.
When redundancies, when companies start making
It's been lost in the news actually, but yesterday there was an announcement about Just Eat laying off, was it 2,000?
2,000, something like that. 2,000
jobs going at Just Eat. Facebook worldwide has just announced another 10,000 layoffs. Amazon has announced another 9,000 layoffs worldwide. And you were saying that you think around the UK, lots of companies are actually quietly, there are layoffs happening that aren't making the news.
They're making them. I know a number of, bear in mind that I deal with quite a lot of companies that are relatively small.
Yeah.
And you only need to publicize your layoffs if it's more than a percentage of a business unit that you're laying off. And then you have to report it to the government. And these companies are being very clever. And that's also your consultation period and all that sort of good stuff. If you keep the percentages small enough within each unit, you don't have to have a consultation period and you don't have to report it to the government. And I know a number of companies at the moment that are laying staff off.
Yeah. And that's not going to hit official figures for some time.
Well, not ever. They won't see it until they pop up on the UC, if they ever pop up on the UC. Sorry, UC Universal Credit.
This next question here. This is a good question. Henry Rapson on YouTube says, Jeremy Hunt says inflation will drop to 2.9% by the end of this year.
Well,
hang on. Will there be a surge in buyers returning around then? So is it best to buy now at a cheaper price? This is the question I was talking to you about earlier, right? Is there going to be a surge of buyers returning to the market when inflation drops?
No one's going to have any money.
Right. This is the point, Henry. It's real wages are contracting. On average, everyone's having less and less and less money. And none of the strikes have been settled with pay offers that I've seen that have actually matched inflation.
No.
So even after their pay rises, they are still not keeping up with inflation. So when might wage growth turn positive?
Well,
not till inflation comes down.
Look at Japan. Look at Spain. They've had decades of stagnant wages.
Okay, and is that what you, without going into reasons why, is that what you're expecting for us?
Well, a lot of people have said to me, who are economists and people who work in finance have said, no, we're nothing like Japan. No, we won't. But I tell you what, an aging population, stagnant wage growth, a boom and bust, falling birth rate, all of these things, you look at it and you go, and that's why we go back, I keep bringing up the immigration piece. Immigration has been 60% of our population growth over the last 15 years.
Right.
And not only that, the children of immigrants form 30% of the birth rate. Okay. So when you bring it together, if we stopped immigration, we lose that 60% of population growth. We also lose all of the children that are coming as a second generation. And people go, well, that's a good thing. That's a good thing. Our services are under stress at the moment. The NHS can't cope. Our motorways, our infrastructure, it's not built to cope with this many people. That's true. But our entire economy is predicated on every generation has to be bigger than the last one to pay for them as they age and stay older. And that's where life expectancy today, Hunt finally admitted life expectancy was actually dropping. And therefore, he was shelving his pension plans. So he wasn't going to increase the pension age to 68. And we'd talk about it after the election.
Right.
But the important factor there, life expectancy is no longer rising as it has done for decades.
And this could lead to stagnation, is what you're saying.
Correct.
Yeah. Anyway, Henry, got both barrels from Alex there on your question. Let's just do here we are. Truth Speaker. Question. How likely are the odds of government stepping in if people are losing their homes en masse?
Yeah. Well, and that's exactly what I think. That's where this is leading, the losing of homes en masse. Now, they've already stepped in as much as they have said that they've instructed lenders that if somebody is going to lose their home, they need to be kind to them.
Yeah.
So they need to allow them to switch to an interest-only mortgage so their repayments drop. And they need to keep that offer available
Yes.
forever in perpetuity, effectively.
Yeah.
They've also said that for universal credit recipients who have a mortgage, that they will start paying a percentage of that mortgage, the interest component, from the moment or 3 months within starting UC, because normally you'd have to wait 6 months.
Yeah.
They've already put a whole bunch of measures in place.
Yeah.
Will it be enough if you are made redundant and you happen to live in a home that you bought in 2020, 21, 22, when they were very expensive and your costs are vast? Will it be enough to stop there being a repossession? I don't think so. But I think what will happen is that the banks, whether it's them or whether it's a subsidiary of them, will offer, rather than repossessing, they will offer to buy the equity in your home, given that they have the mortgage on it anyway, and they will become the biggest private landlords. Rather than, it means that the government don't have to build social housing, because what they're going to have is a whole bunch of private, but with the institutions that they have some control over. And so they go, well, it's okay, your Lloyd's house that you are now renting, you used to own, but you don't own anymore, you're now renting. It's at a very reasonable rate because we've guaranteed that they'll give you a reasonable rate. Not like your private landlord who might want to buy a Bentley and therefore ups your rent for no apparent reason. You know, they're going to have to play by the rules.
Yeah.
My view. I have no idea. But
by the way, Henry, I just had another thought on Henry's last question. No one knows what's going to happen, you and I included.
No.
Unforeseen things do happen. And for those of you who are waiting to buy but are afraid of missing the bottom and then not being able to catch it when it takes off again, if you're in a position to buy now, you can actually afford to buy now, and you want to live in a home now, and you're afraid of missing the bottom, don't wait. Don't wait.
No.
If you can afford something, don't wait. Now, someone else asked about the fear of negative equity. That's a personal decision. That's based on your job security.
Yes,
it's
on your job. More than anything else, it's what is going to happen in your life in 5 or 10 years. Are you buying a 2-bed flat now, but you want to have a 4-child family in 10 years? In which case, you got problems. You know, and how secure is your job?
Yeah, I think that's if you can afford your mortgage for 10 years and you don't want to leave the house for 10 years,
don't worry
about negative equity. Bibin Thomas Panavelil says, beg to differ with you, Charlie. On what? I'm curious to know on what you're differing with me on. Let me know. Let's have that out. Let's have it out.
You haven't even been drinking. He's already getting aggressive on his 0 alcohol Brewdog Pump IPA.
Philip Reynolds asks, are there any telltale signs that the housing market is struggling that the average Joe can spot? E.g., I imagine agents will want more people viewing rather than insisting they're sold first. Yeah, those are all signs. Again, that's going to be very local and anecdotal, but number of new mortgage approvals is dropping. That leads to estate agents having fewer transactions, which is a problem for them as a business. Any business that has a contraction of its unit sales is going to have problems. Secondly, yes, you'll find them more amenable to giving viewings because viewings are the lifeblood of estate agency, and even if you're not going to buy a house, a viewing will help them give feedback to the vendor to say you need to drop your price. I think when you say housing market is struggling, I think in my mind that means transactions are struggling.
Yes, rather.
It doesn't matter what's happening to prices.
No.
And yes, transactions are struggling at the moment, and that's partly because of unrealistic expectations by sellers who don't understand the maths of the fact that first-time buyers made up over half of all transactions last year, and first-time buyers are almost all mortgaged buyers, and almost all of the buyers who made up more than half of last year's transactions now have a lower budget and cannot afford to pay the asking prices for sellers. But sellers just I don't want to hear it. 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 My house is worth this much. It's worth this much. It's worth this much. I don't want to hear it. Okay. Bibin Thomas Punavelli says, what we will see is a consolidation in housing market. And when the boom starts, it'll be a massive one.
Ah,
So, Bibin, that is a totally unsubstantiated opinion. And what we'd like to invite you to do is to offer some data to
Yes.
back that up, rather because that is just an unsubstantiated opinion. Why do you think there's going to be a boom, and why do you think there's going to be a massive one? Explain that. Yeah, Jay says
I'm too shocked to speak.
I know. I'm sorry, Bibin, you might be right. You might be right, and we might be wrong. Okay, but you're not providing any logic or rationale to your opinion, and I'd like to see that. Yeah, Jay says we won't see 2% inflation again for quite some time. I said before the BV are going to wimp out and be allowed to settle with the inflation at 3 or 4%.
Oh, that's possible.
Yeah.
I don't disagree with that. They may well, and it's not wimping out when you're breaking every single sector of society. You kind of go, yeah, there's masochism, and then you can take it just a bit too far. When you've got children crying homeless in the street, or you've got 3 to 4% inflation rather than 2%, you kind of go, do you know what?
Yeah.
For the children,
Yes.
we'll take the 3 to 4%.
We have another one. Tochi Tim. Hi, Charlie. The house prices will go down only if Third World War starts.
What? What the fuck?
So Tochi, again, you need to back up an opinion like that. House prices already are going down, as confirmed this morning by the government, and have been for 2 or 3 months. Secondly, real wages are contracting, so everyone's got less money on average. House prices can't go up when everyone's got less and less money every month on average. And number 3, the cost of borrowing money has jumped almost double in the last year. That hasn't had time to feed through to prices yet.
Charlie, can't you see that beanstalk? At the top, there's a goose, and I tell you what comes out of its arse, it's gold. It's gold. I'm going to buy myself a mansion tomorrow with the gold from the goose's arse.
Tochi, I am not mocking you. I don't know who you are or where your opinion comes from, but of course, if Third World War starts, who knows what happens in that case. Right?
House prices are kind of immaterial at that point.
But house prices are already going down and will continue to go down for some time. Alex Pitcher says, controlled demolition of the economy. Paddy says, behave, Tochi. Quite right.
Nice one, Paddy.
Yeah.
Shame about the rugby.
John Howick, 33, says, hi, Charlie. I'm looking to buy the next few months. I can't really afford to rent due to circumstances. Will I end up overpaying because of the downfall to come in house prices? No. Overpaying is a subjective and personal thing. It depends on how much your deposit is. It depends on your job security. It depends on how long you want to stay in the house. When I say don't overpay, what I mean is make sure that you don't needlessly increase your risk of negative equity if you might need to move. There is something called a certainty premium, which if you can afford it means I have a home, I can live in it, I can stay in it. I just want to get in the home. And so, do you know what? I'm going to pay the price that's being asked, or the best price I can do, and just move in. Okay. So you won't be overpaying.
It's worth noting there are very few people who are able to pay that premium.
Yes, that's true.
You know, life. Most people are as stretched or as spread as thinly as you can possibly be.
Yeah, but there are also people who either because they've inherited some, or because they sold a business, or because they've been working hard and saving for 20 years.
Yeah.
There are people who do have a meaningful deposit and might be in a position to go, I could pay 5 or 10 grand more, but I don't want to overpay. But I also don't want to lose out on the property, and I do want to get into a home.
No, absolutely. And you very quickly made a mistake last week when we were chatting. This week, can't remember. The £1 million insurance on any deposit in your account is not just for the sale of a home. It also applies after a divorce, and it applies after an inheritance, and it applies after an insurance payout. Okay. So actually what you've just said, so somebody who's inherited and and probate's gone through and a property's, whatever's happened, and they've got money in their account for whatever reason, they're actually insured up to £1 million for 6 months. So it's not the 85 grand that we all hear about. Okay. That's just to put people's minds at rest.
Okay, cool. Regina. Hi, Regina. Thank you for the comment. My company has been told they need to make a 33% cost saving in the coming financial year.
Well, they're going to sack a lot of people. That's the way it works.
Yeah. Scary stuff.
It's horrendous.
Indeed job board has laid off 2,200 people globally today, 15% of workforce.
I'm expecting between 12.5% and 15% unemployment by 2025, which will actually be the worst numbers, even including the 80s. And I'm a freelancer, by the way, so a little like I have no interest or housing bias in terms of buying and selling. As a freelancer, permanent employees and redundancies, it's not something that I'm involved with, so I have no bias either way. But the job market overall, my strong wish is for it to be good.
Yeah.
All the data that I can see and all the indicators suggest it's going to be fucking horrendous.
I fear the same. Zohaib Qureshi says, question, Charlie, would it be cheeky to make an offer 30k below the asking price considering where the economy is heading? Well, first of all, I don't know. You got to give me the context.
Value of the
What's
house.
the value of the house? If it's a £3 million house, no, 30k is 1% off. No, okay. If it's a 300 grand house, that's a 10% off. I'm assuming it's going to be 300 grand.
Yes.
That's roughly that. Yeah. So 10%. Whether or not an offer is cheeky has nothing to do with how much it is below the asking price. It's to do with whether you're just chancing your luck to see if you can get away with it, rather than making a serious offer. If your offer is serious because you want the property and the best price you're prepared to pay is 30k below the asking price, but it's a serious offer, then that's not cheeky. If there are no other offers, that is not cheeky. That is a perfectly legitimate thing. It's as long as it's a serious offer. Don't ever make cheeky offers, because when people say cheeky, I think they mean I know I'm taking the piss.
Yes,
and that it doesn't improve your chances of agreeing a good price if you take the piss. But if you explain, and always put your offers in writing, by the way, guys, by email, this is the maximum price I'm comfortable. And guys, if you're not going to offer your maximum price, you're going against my advice anyway. And it just you're probably just negotiating. Maybe you're an investor. But if you're a home buyer who wants to secure a home, always offer your maximum comfortable price and do not go above it. Put it in an email and wait. It doesn't matter how far below the asking price it is, because some agents, the asking price will be much too high anyway. Some sellers will be prepared to drop further than others. Yeah. So the asking price is almost irrelevant. The agent might say it's not, and the seller might not think it is. But actually, if there are no other offers,
exactly,
it is an irrelevant thing.
That's the important thing.
Yeah.
Yours could be the only offer in this market. Yeah. Could be the only offer they get.
And if yours is the only offer, you are the market for that house.
Yep.
So as long as it's a serious offer, it doesn't matter how low it is. And by serious, I mean you want to buy that home. That's the maximum you're prepared to pay.
Another one of the house price up, house price down.
Yeah. That's actually very interesting. Craig Wood asks, the Bank of England has to increase interest rates. I agree.
Yep.
Do you think we'll see a credit crunch making mortgages harder to obtain for first-time
buyers? 100% yes.
How can first-time buyers prepare and be in a strong position to counter a credit crunch?
Never, ever have a county court judgment against you in the past. Always make sure that you've paid every bill. Yeah. Never have a credit card.
Have a high credit score.
Yes. Why don't you already have these
demonstrated track record as a responsible borrower?
Yeah. Unfortunately, you are where you are, and it takes many years to improve or change credit rating for the positive. It takes one screw up to change it for negative. Yeah. And not only that, I've had good friends with very good credit ratings who unfortunately were associated with a property where somebody there had done bad things and committed fraud, and it hit their ratings.
Yeah, it was a nightmare. What you have reminded me, though, is this. The more time I spend talking with my mortgage broker friends, the more I understand why always talking to an independent whole of market broker, unless you have this perfect flawless track record of which you just described, where I've been in the same job for 10 years, I've got a perfect credit rating, and
my pay rises have been X, Y, every single.
Go to high street bank.
No, but that whole market brokers,
but the whole of market, and what I've learned recently about the whole of market is that every lender treats every different borrower differently.
Yeah.
So Alex might get offered something, the best offer from him might come from that company over there. I might, for the same amount, get a better offer from someone over here.
Yeah.
Also, Alex's circumstances for buying might be different. Mine might be, I'm going to buy and stay for 25 years. You might be, I'm going to buy and move in 5 years. This is the point. The value these independent whole of market mortgage brokers offer is knowing where to point you that's best for not only your finances, but also your circumstances, your life circumstances, and your life plans. So I think that if there is a credit crunch coming, the sooner you've got a functioning relationship with an independent whole of market broker, that's the best way to maximize your chances of getting
a mortgage. Yeah, 100%.
And guys, I'm going to use that as a shameless opportunity to plug my guys, mhwc.co.uk/mortgage. These are my hand-picked, trusted mortgage brokers who are independent whole of market brokers. And if you end up taking a mortgage with those guys, you're also supporting me, so that'd be very cool. Now, Craig McCall, it's quite a fun question. Hi, Charlie and Stig. What's your longer term estimations for the housing market after the likely crash? Craig, in a word, I think it's stagnation.
I wouldn't go with stagnation, but I certainly the comments we had earlier about there's going to be a boom and it's going to no. I think that this economy is heading for a massive step change as technology takes over from traditional finance. And that is going to impact a lot of assets. Housing is one of those assets whereby there will no longer be massive boom and busts, as we've seen, 70s, 90s, 2007. You see it every 18 roughly years. That's going to stop. Houses will be treated as a service like any other service, and they will appreciate in value, but in line with all the other economic indicators like inflation, etc. They will not be your investment. They will not be your pension. They will not be, look, my house, I've made so much money, I'm going to take some equity out and buy myself a Porsche. No.
That ship sailed.
That ship went. That's a whole different. We are at a change in our society in technology terms.
Yeah. Interesting. Yeah, I agree with you. Sarah Elan, I'm sorry if I pronounced that wrong. Houses where I live in Surrey being over 20k less than asking prices minimum. We've been out viewing and talking to agents. Excellent. Being out and viewing and talking to agents is the best thing that you can do if you want to snag yourself a bargain at home. What do you see happening for properties used with Airbnb? Well, in the cities, I think there's always a pretty good demand for that. I don't see that changing much. I think the rural second homes used as Airbnbs are probably going to struggle a little bit.
They're going to be selling,
and a lot of people will be selling them up actually.
Yep. Which again will reduce house prices.
Here's a question. Paddy asks, how can it be justified to use taxpayer money to prop people's mortgages up to stop repossessions?
Oh, it's a really bloody good question, and it's not justified. It's a complete arse, as far as I can tell.
Okay, maybe play devil's advocate. This is not what I think, but I'm going to pretend.
Yeah, you pretend
to be the government justifying.
You mean you're only saying you're telling me that so I don't.
Well, you see, the reason that this is in all of your interests that the government uses taxpayer money to prop up people's mortgages to stop repossessions is because repossessions would be bad for GDP.
Yeah.
And if GDP falls, that affects everyone's employment prospects and the economy. And those of you who are renting, who think this is unfair, actually we're doing this to help you.
I'm sorry, Mr. Devil, whose advocate you are. I'd just like to point out that it's really confused me almost my entire life, and bear in mind I'm 50, that the only people who have been rewarded in society are those who have been totally profligate, who have borrowed well beyond their means. And every time they have been rewarded with low interest rates, with protections, with reimbursement. If you took out RPI or whatever it was, insurance, we'll pay you for that.
Wow. You've got to speculate to accumulate.
You've got to fucking stab yourself in the face with a blunt, rusty fucking spoon. What?
Yeah, I know. It is. You make a very, very valid point, which is careful people have not been rewarded.
No, savers, fuck you. Interest rates 0.
Yeah.
Borrowers, no, it's all right. You can stay in your house. Your tracker is at 0.25 below base rate. Oh, that's all right. You don't actually have to pay anything on your mortgage for 3 years.
Tommy says, is it going to be harder to obtain mortgages going forward? Not immediately, but gradually.
I think it's starting already.
Yeah,
I honestly think it's...
You're seeing the early signs of it getting harder. It's going to get gradually harder. I don't see any sudden shock to mortgages.
No.
But I do see a gradual tightening and getting more and more cautious about who they lend to, stricter criteria. I do see it getting certainly not going to get any easier anytime soon.
No, agreed.
Oh, that's an interesting question. Abigail Smith says, if we get a CBDC,
Yes.
Britcoin, will the mortgage shift to the CBDC?
Yes.
Will it be revalued?
No. Look, nobody knows because they haven't done it. And my view is that CBDCs will start from the outside of banking in. And by that, what I mean is they will start with retail.
Yeah.
So it will be your wallet, which your pay will go into, which you will be able to buy things with at restaurants and supermarkets and so on and so forth. Then it will move into commercial, which will include things like your mortgages, your savings, all of this sort of good stuff. And I think they will leave investment alone because, of course, that then gets involved with shares and gold and all that sort of stuff, which is separate, but there'll be conversions. But what it will be, I believe, is a straight 1-for-1. So if you've got £100,000 saved, you will have 100,000 Bitcoins. And if you have a £300,000 mortgage balance, you will have a £300,000 Bitcoin balance. Now, how they separate those accounts are still up for grabs. They don't even know yet whether they're going to be building on blockchain. I don't think so. Or whether they're going to be using other platforms. They don't know whether it's going to be centralized, decentralized, physically located in separate data centers, which I believe, and I think it'll be a centralized ledger. Yeah. But this is all up for grabs. And that's why it's going to be at least another 5 to 10 years before we actually see CBDCs.
Okay.
And in that period, unfortunately, we can't have debt jubilees, and all the pain that we have discussed, we're going to feel for the next 5. That's why I say 2029. Yeah. You know, if you want to.
Yeah. I mean, all of these questions are great. We could talk about that at length, but I want to just get through as many questions as I can. Tired Gunnosaurus says, if a bank had to unfortunately repossess a house, where do they sell the house through an estate agent? Yes. So typically speaking, as long as it's a house that will be expected to sell on the open market, the estate agents will just give the houses to estate agents to sell them. If there's a problem with the house, problems with the title deed or anything like that, if it's not a suitable property for lending on for some reason, then they'll have to put it straight into auctions. Is it all gone?
It's well.
There's another one.
Perfect.
If you must.
Oh, well, you know I must.
That was the one I was going to replace to right, but that's cool. Go for it. What is happening to house prices in Scotland, asks Aisha Latifa. I don't have real insight to Scottish house prices, but I have heard anecdotally from a few people that they are starting to soften, weaken. Yes. And although they're a long way behind the south, they are. I'm not confident. This is not a high level of consciousness.
Weren't there talks about people from Scotland actually having to leave Scotland to live just on the borders because the SNP and what's happening up in Scotland meant that it was conducive to actually live in England and then drive into Glasgow.
Exile 2828 says, what do you think about a estate agent that charges a buyer a non-refundable deposit to prevent time wasters? Seems suspect.
What?
Have you actually encountered that?
That can't be part of that.
So, well, hang on, be careful, because there are reservation agreements in existence, which some agents use, where they say if you make an offer on a property and the seller accepts it, you have to actually put down a small-ish, like £3,000 or 1% of the value, non-refundable deposit to show your commitment. That does happen, but that is an optional agreement.
Yeah.
What it tends to do is it means that the buyer's not going to get gazumped.
Yes. Yeah. No, I get that.
There are some benefits to it, but there are also some complexities to it. If you're talking about a non-refundable deposit to prevent time wasters for viewing, don't do that.
No, not a chance.
Okay. When do we think scared sellers will come to the market? I think it's okay. The process of a seller thinking to themselves, I think maybe we should sell, that's where they start. The time between that process and actually selling has several phases, which is, I think we should sell. What do you think? We should sell. Okay, where do we start? When do we do it? Oh, let's start talking to agents. A few weeks go by. Then they're worried, they're nervous, they don't really want to sell, they should sell. Uh-huh. Then they decide to choose an agent and they go ahead with the agent. They go on too high a price. Typically, almost everyone goes on too high a price. It doesn't sell. They want to change agent. Hang on, they signed the sole agency agreement. They're now stuck with the agent for 12 weeks or 16 weeks. They've got to drop their price. Okay, now eventually they might get. So there is at least typically a 3-month process for deciding to sell.
Yes.
To actually getting even onto the market.
Well, you say that, and this is where we had that conversation earlier. What's interesting is, that area of Putney that I'm looking at and I'm monitoring very closely.
Yeah.
And it's a tiny microcosm.
Yeah.
But it's literally been in the last 2 weeks, since the whole SVB thing, that 8 very high value properties have come onto the market. There were none. No houses were selling in Putney. There was 0 houses, all flats. And suddenly 8 of them come onto the market, all in the £2 to £8 million range. And I think there are people out there panicking at this point. They're beginning to panic.
Yeah, I think so too. So Paddy says, I want to buy now and I can't afford, but the houses are just so overpriced. Just because I can afford it doesn't mean I should pay those prices. We're talking 50 or 40, 50K increase. Okay, Paddy, yeah, I agree with you. So for someone in that situation, your affordability, and it's a trade-off between your ability to pay the prices being asked and your out of 10 how urgently or how much you want to be moved into a home and stop waiting. There is a trade-off. And as long as you're out viewing regularly, it's a mistake to be sitting there going, well, I'm not even going to view because they're all too high.
No, go look. You've got to go and look. It's the best way to find out what's happening. Lots of questions. Let's try and get through. Let's try and have some quick fire questions. Aaron Hughes says, is the bank and mum and dad helping out first-time buyers cutting back due to the cost of living affecting them? I think so.
Yes, agreed. What do we think about Jeremy Hunt's 2.9 inflation call now?
Sorry, about his...
Jeremy Hunt's 2.9% inflation.
I still think it's possible.
This year.
I still think that we could go into a very fast, massive recession very quickly. And if the banks break, that is exactly what will happen. If you look at 2007, 2008, and you see how fast things fell, it really could. Inflation falls very quickly when it starts to go because you've crushed the economy. Everyone is unemployed. Everyone is fucked. Do I think it will happen? No, I don't. Is it possible? Yeah.
Okay. Sorry, guys, just reading questions.
Have you got crisps over there?
I have.
Get a hand them over.
These are really good.
If I'm going to drink
These
2 bottles
are
of your red wine,
Aldi's own brand.
Oh, but they're crinkle cut, which is the best. They're the best.
So good. I'm gonna ration you because I always just trough
I
a lot.
will trough the lot.
Take a handful. Just crack on.
So that's the whole bag.
Not a whole bag. Take a handful.
No, we're good.
Take
No,
a
we're
handful
good.
back.
Okay.
Come on.
Thank you.
John Howitt, that's an interesting question. Does a property have to be on the market for a while before I make an offer below asking price? Doesn't really make a difference. What matters is whether there's other interest in the property or not. If there isn't, and you're the only person, don't wait.
No, make your offer.
Don't wait. Ba, ba, ba. Someone says, "What?" Someone called Wild Goose says, "There's nothing coming out of my ass, thank you."
What? Not even gold,
Not
you
even a golden
bastard!
egg. What kind of goose are you? Not
Yeah.
a golden egg.
Mother goose, you pussy!
Okay. Question: if the banks start taking homes into ownership, would this then reduce market availability and then increase prices overall?
Banks will become landlords.
I don't have a strong view on this.
I'll keep saying it. Banks will become landlords.
I don't disagree with it.
John Lewis is becoming a landlord.
Right.
Everyone's becoming a landlord.
I'll say one thing.
These are nice crisps.
It continues on a daily basis to stagger me how slowly sellers are coming to terms with reality. Staggering how
They
slowly.
do not want to hear what you've got to say.
Craig Stevenson said, "I recently sold up. Well done. Got out the top. And moved into a nice rented house with a 2-year lease. Paid for out of the interest from the proceeds of your sale, I assume you mean. My neighbours thought I was mad. Am I?
No, good job. Proper job.
I think you will be benefiting from that move for the rest of your life. I think. Follower of Christ says, I don't know if I should rent out my property, which has been on the market since January, or just be patient to sell it. Well, it depends on your reasons for selling it.
No, hang on. Follower of Christ, surely you should just allow people to stay there for free. I mean, no, don't wave your finger at me.
I don't want to go there.
I have no charlatans
I
here.
just want to answer the question. I don't know. It depends, right? Do you need to move home? It's an impossible question to answer without knowing the circumstances. Sorry about that. He's on his second bottle, David.
Yeah. Well, and actually, that was after 2 wines in the pub.
Yeah.
So it's more like my 3rd bottle. I'm sorry.
Oh, no, don't be. No, it's better. Does anyone object to this live stream? If so,
you're free to leave.
Yeah. You have absolutely. You have our permission to leave. Just when the bank bail-ins to start. Yeah, actually, I have a question for you. Dave Johnson says, just waiting for the bank bail-ins to start. How wealthy will people feel then? My question, though, is, do you think we're going to have bank bail-ins in this country?
Not in a way that will affect deposits, no.
Okay.
Will they affect shareholders? Will they affect bondholders? Yeah, I think so. I think there's a good chance of that happening, although it's not going to be all banks. Mm-hmm. Let's put it this way. If bloody RBS and Lloyds, who have been bailed out to the tune of billions, get involved in all of the rubbish that is taking down other banks, someone should go to jail.
Yeah.
I mean, we are now at that stage.
Yeah.
No, I'm good, thank you. Whereas some of the other banks, yeah, possibly, but not deposits. I don't think we're going to see people losing their savings to prop up banks.
No. Taliesin Walker says, excuse me, guys.
They're very good crisps,
yeah.
and we didn't eat much.
Unemployment was supposed to be huge after 2008 and during COVID. Didn't really happen. I assume what you're saying is, why is it going to be high unemployment now?
Well, hang on one second. Let me just get my stats, because I'm a sad bastard like that. I do love getting stats.
Did you say 12.5% unemployment?
That's what I think we're heading to, yeah.
Craig Wood says 12.5% unemployment, exclamation mark, question mark twice.
Yes.
That's fucking mental. How do you come to that conclusion? Which industries will be most affected?
I shall tell you why. If I can just find the right graph. Do you know what? It's easier finding grass when you're sober. Did you know that? Okay, so hang on. I've got it here. Right, we hit 12% unemployment in 1984. And that was after a massive inflationary period where inflation hit, let's be very sure about this, 14%.
Okay.
Yeah. And interest rates, because back then we actually used to hammer things hard with interest rates, hit 15%. Mm-hmm. But we had 12% unemployment. Now, you say, oh, well, you know, after 2008, there wasn't really much unemployment. Well, there was. The unemployment at that point was 8%, more than double what it is now.
Okay.
So don't say that there wasn't unemployment. There was. Mm-hmm. And as for COVID, the government gave everybody money. Of course, there wasn't unemployment. They handed out cash like it was sweeties. Now, not to people like myself who have a business, you understand, but to everyone else. But, and here's the important thing, unemployment figures don't tell the whole story because they remove from unemployment those who are sick.
Okay, that's true, yes.
And those who are caring from sick.
Okay.
Now, what we've seen is an increase in those who are sick and not required to work, or are caring for those who are sick and are not required to work.
Economically inactive.
Correct. No, that's different. That's very different. Very different. Who are claiming universal credit. That number has gone up by 1.2 million. Okay?
Without increasing the unemployment figure.
Without increasing the unemployment figure because they are sick. That has gone from 700,000 to 1.9 million people who are on universal credit, who do not have a job, who are of working age, who should be working.
Okay.
So don't think that COVID has not had an impact on employment.
Right. Okay. Yeah, very good point. Heather Kim says, is that insurance that Alex mentioned automatic? I have money from a house sale coming very soon.
Automatic.
And I'm worried about where to put it so secure. Now, someone else has replied to her saying, Heather, the insurance wouldn't actually cover everyone in the country.
What?
I think someone's saying, in the scenario where there's mass bank collapse.
Yes, well, that's true. I mean, if a nuclear missile strikes London, you know, X, Y, and Z happens. Your deposit for 6 months from the time that you make the deposit is absolutely fine. Banks are not at this point. That's the weird thing about this start of this banking crisis. Banks are not short of reserves. They never lent out all the QE that was printed. That's one of the reasons why, you know, the government is so unhappy with them. They printed all this quantitative easing, expecting them to lend it out, but they didn't. And now the banks have got loads of liquidity individually, collectively. Individually, like SVB, not so much.
Interesting question from Milan Suman. In your opinion, if and when CBDCs land, will owning a home become unattainable?
No, you're thinking of CBDCs almost the wrong way around. It's sort of like a utopian communism, in that everyone will have a home. You might not like it,
right?
But everyone will have a home. To begin with, CBDCs will make no difference to housing. You'll have your own home. It'll be just like dealing as we do at the moment. Most people don't carry cash. You use your phone or your card to tap on everything. It's all digital. Yeah. It's simply that it'll run through the government now, rather than running through your own bank.
Yeah. Valentine D, I think we've asked that question. What data is your 12 to 15% unemployment rate based on? It's based on lots of data, isn't it?
Yes.
Okay.
But it is a complete guess.
Mm-hmm.
I mean, let's not make any mistakes. I've looked at traditional trends of bubbles to trough.
Yeah.
And what I can see, given the number of zombie companies in the FTSE 350, which, by the way, anyone who does any analysis of the FTSE 350 companies and looks through their balance sheets, as I did, took a lot of time at the beginning of the year. I was very bored between Christmas and New Year. I think 60% of them are over leveraged. And of those 60%, 50% have way too much debt, bad balance sheet, and bad free cash flow.
Okay.
So at that point, what you're looking at is 30% of almost over 100 of the FTSE 350 companies that are potentials to certainly have redundancies and potentially even failures during a crisis.
30% of FTSE 350 companies.
Yeah.
You're talking about zombie companies.
They're not all zombies.
Okay.
Of those, about 50 are zombies, as far as I would define it. They are only just making enough money to service their debt and pay their payroll.
Jazz went right. Should we cave or hold out? Will they come back to us? I think if you're asking about whether to wait for your offer, always hold out.
Yeah, wait.
Hold out. Right, just trying to. Okay, we reached an hour. We're going to have to wrap it up soon. Do you know anything about a company called Ripple?
Yes.
What do you know?
They're a crypto company. Everyone's banking on them passing some US legal challenge, and then they're going to become the base coin for whatever it is.
Roll on the great Airbnb sell-off in Cornwall. All right, good question. John Howitt. Do offers in excess of or offers over actually mean anything?
No. It's total cock. It's just there to try and psych you.
The only thing more meaningless than those is the asking price itself. Right?
Cheers.
This is just to give you a serious answer. These phrases are used by agents to butter up the sellers.
Yeah.
Now, so there is an exception to this. Poor agents will do this and just hope. Very, very good agents will do this and mean it because they know that they've priced the property super sensibly. They know that they're saying, this is the price. It's 10 grand lower than anything else comparable on the market.
Yeah, but how many agents do you know that actually do that?
Yeah.
Oh, really?
Good ones.
Yeah, but they
every single one.
But now they're confused. So for someone like me who's naive in this stuff, I would look at that and I would immediately think psychological cock.
Yeah. Well, this is why you've got to get out and view.
Yes. No, you're right. If you're viewing them up, you then know.
You've got to go and see them and then find out the story of why it's being sold, because that's when you'll find out whether this is priced to sell quickly. And really, really good agents will prepare a property properly. They'll get their registered buyers fluffed in advance.
Yes, but this fluffed is a great word because in my experience, which is almost zero with properties, people treat viewings as a chore that they have to go and do in order to find their house. Whereas if they treated it like an adventure where they could find a story behind every house and why it's being sold and who's selling it, and then you have a much better idea of how the market works.
Everything you want to know about the area you want to live, you will only find out by going and viewing stuff. You won't find out online. You won't find out online. Okay. Good question. Miss Jane asks, what is the percentage of workforce layoffs that become reportable to the government?
Oh, crap. I can't remember.
No, we don't know. Okay.
I'll tell you what. I will look it up and I will find a link and we can stick it up for you.
Patricia says, not sure big Airbnb sell-off, but my landlord has a holiday let and bookings are 80% down.
Yeah. Well, people don't have the cash.
Aaron Hughes says, I understand one key indicator of an economy doing well or not is car sales. This market seems very strong, despite cars being priced at an all-time high. Any thoughts on this? There is because of the supply chain shortages and chip shortages
that happened all the way through COVID.
Genuine.
There's a backup, a huge backlog.
There is a genuine backlog. There's an underproduction of cars that's led to a shortage of supply. Having said that, what I do think is you'll start to see as tax increases bite, especially people who've got an extra car that they like. It's a nice to have. You'll start to see a lot of cars coming to the market. And you're right, that will be an indicator.
But the better indicator is not the new car buying.
No.
It's the second-hand car market. That's where you look, because you remember in 2008, I got somebody phone me up and said, I've got a V8 Aston Martin Vantage, which has got 5,000 miles on it, and I'm trying to sell it for 35 grand.
Mhm.
If I had had 35 grand, I would have bought it, because only 2 years later, that same car was worth 55 grand.
Right. Couple more questions, and then we're going to wrap it up. I'm gonna just skip through.
How much abuse are we getting for my drunkenness?
None. Everyone loves it.
Well, that's fantastic.
You love it, right, guys?
You are brilliant people.
Just Jason Boone just interviewed 6 agents. One offered 1% of valuation paid now, 1.5% of sale price at completion. Have you heard of that before? I have heard of that before.
Really? That seems.
I have heard of it, but it's not common. I don't like it.
That
never
seems odd. It feels
never
odd.
pay up front. I mean, that's a purple bricks type thing. Never pay an estate agent until they've sold the house.
Exactly.
Until it exchanges.
Otherwise, you're locked in everything.
Never.
No.
You are not saving money if they say, "Oh, we'll charge you less now," because they'll take that 1% off you, and even if they don't sell it, you won't get that money back.
No, and 1% is about what they make on most deals anyway. So screw them.
Jake about says, do we know the figures for when most mortgages are coming up for renewal? Could be a catalyst for price drops. Yeah. I think June was a big one, isn't it?
No.
It's gradual throughout the year.
It's gradual throughout the year. But there will be 1.4 million additional people who have had to remortgage by June.
Yeah. Okay.
So, that's when, if you look then, you'll get a really good idea.
Yeah. Ian Downey, I don't know if I can answer this one. I'll have a crack. Due to get married in September 2024.
Well, congratulations.
Congratulations. Partner and I both currently living with parents. Both living with your own parents, or both living with one set of parents? Because that is a material.
No, I think living with other parents. I think what you do is you live with your.
So, are you both living? Are you in the same house, in one of your parents' house or the other parent's house, or not? Because that actually, I think,
how soundproofed is your bedroom?
Yeah. Looking at getting a home together, northwest, Q2 or Q3 next year. Best advice? Question mark.
Get married, love your wife, have a fantastic life, buy a house.
Save as much money as you can.
Yeah.
Unless there are any reasons that you wouldn't want to move in together before you get married, which there might be. I would consider, this is just off the top of my head, I would consider, even if you weren't going to move into it, if you've got the money in place, you could buy it and rent it out until your weddings. You could buy it this September, rent it out for a year.
Oh, I see. Yeah, no, absolutely.
Like a fixed 1-year contract. So
although, come on, but prices are then they are.
I don't know. It's just one less thing to worry about, because when you get married,
yes, you need to know that you've got somewhere to go.
Nice to know that you've got your home lined up.
I get that.
That's an idea that I would consider if I was in a position to do so. This September or so, I'd be looking and thinking, yeah, maybe you could just put it on Airbnb.
However, I can't remember what film it was, but there was one where people went on about weddings and marriages, and that was such a big affair. And in fact, you should just be in a caravan overlooking the sea in Scunthorpe, wherever. As long as you love your partner, all is good.
That's true. That's very true. Keith McGivern says, Northern Ireland prices still seem really high. The peak here was perhaps a bit later than in England. I know you haven't got Northern Ireland data from Best Agent, but have you heard anything from NI agents about the local market? No, I haven't heard anything from Northern Ireland agents. I do have a couple of contacts and a couple of follows from Northern Ireland. And again, it's the sort of same as Scotland. It's starting to ease. Just, it is 6 to 12 months behind England, perhaps. But it is, I think you're seeing the tops. Kid Cow makes a very important point. Property Stig needs to remain faceless to protect the public.
You've obviously seen my face because it would protect the public not to see it.
Well, we've got your mug on screen, your profile picture.
Yeah, but I'm wearing glasses. That was my 40th birthday
Mm.
in the rum bar just up in Lavender Hill.
Very nice.
Sugarcane.
Alexandra Saywell says, what advice will you give for those who hope to buy new build properties? How do you negotiate down? Advice number one, have at least 2 properties that you can play them off against each other.
But having worked, I mean, I've spent the last 4 years working with developers,
Yeah.
building mostly commercial and office buildings. However, they do develop residential.
Mhm.
And the reality is these guys
They need to sell.
they need to sell. I mean, they've got money tied up from backers, etc. They need to sell, but they are very hard-nosed, traditional builders, which means you cannot go in and say, well, you know, I'd like a 5% discount. And they'll just laugh the hell out of you.
Yeah.
But if you walk in and you're definite and you walk away and say, well, I simply won't buy it.
Yeah.
I simply will not buy it
Mhm.
unless you do X.
Yeah.
You'll be amazed how fast they cave.
I think, because those guys they're very, very seasoned negotiators.
Oh, God, yes.
So but the thing is, it doesn't matter how seasoned a negotiator is. I'm a better negotiator now than I was 20 years ago, right?
Mm.
But it depends on the circumstances. It depends on how much you want the thing and how much the person, and unfortunately, I have tried all my negotiating skills in the world on something when I needed to buy, but it was the only one that I wanted, and I just had to pay. I just had to pay. But there are other times when actually I have pulled
Been
from those deals.
fantastic,
It all depends on the need, and if you are a buyer ready to move, and you can show we are going to buy a home soon. We've looked at your one, we've looked at one down the road, and one over there.
Yeah.
And whichever one of you gives us the best deal, that's the one we're going to buy. So give us your best deal.
100%.
That's what you've got to do. That's what you've got to do. You've got to make them believe that you will, if you don't buy theirs, you'll buy one of the others.
Because they will lie to your face.
They will.
They will tell you it's impossible. Make them hurt.
Tanya Coulter says, Stig is a glass away from a TikTok dance.
She's not wrong. I've got to be
Alex
honest.
Pitcher says, end all central banks.
Again, not a bad idea, but it's not going to happen.
Guys, I'm going to wrap this up now. I'm so sorry that there's so many questions here, and there's 440 people watching this.
Oh, you're kidding me.
I'm not.
I should be more sober than this,
Yeah,
as
yeah.
Woolly Mama says.
This is live. We can't. This is out there, right?
I was fucking. But I tell you, I was fair drunk.
Michelle says, "Oops, he's rather tipsy." Happy Mark says, "Best live chat for 9 months." Wendy says, I don't even know how far. I've got to speed scroll past a bit of this. Let's just.
There are
I'm
so
sorry,
many
there's
questions there.
so many. I know.
Dear God, people, haven't you got answers? Put some answers in.
Oh my God, I love Stig. Ha ha ha. This is Jazz Percival.
Nobody loves Stig. I am a
Housing
difficult
Stig,
bastard.
Yeah. Good live stream, Batman and Robin.
I please tell me I'm
Drum
not
kit have you
Robin.
got? I've got a Pearl Export drum kit. How did you know how to drum kit? Oh, because you may have seen it on the drums. So entertaining. Please get pissed again. Cheers, Stig. You will laugh when you watch this back.
I probably will.
Says Andrew Taylor. Guys, thank you very much. It's been wonderful having you all here. I do just want to let you know that experimental first-time buyers private live stream group that I had, which I limited to 50 people. After 2 of those live streams, it's been a success. And all of those 50 people have said, right, let's open up to 100 and let's open up to all buyers. So it's no longer just first-time buyers. First-time buyers and any other buyers it's now open for. We've now it's a maximum limit of 100 people. I had about 5 or 6 people join today. So if you want to join there, it's buymeacoffee.com/MHWC. And you'll find it there. I'll put a link in the comments after this. And I'm also going to do a separate group just for sellers. I'm still putting that together in terms of the format it's going to be. So we have a sellers private live stream. And basically those private live streams are just for buyers, the ones I'm already doing. And I basically answer every single question, and you can join me in the video and get you on screen if you want, audio only or in video or just in the comments. But my goal is to answer every single question in those private live streams just for buyers. So please do go and join. We won't go more than 100 on that one. And other than that, if you enjoyed this and you want to buy Stig a coffee, because I think he might need one.
No, I want a Fernet Branca.
Yeah, buymeacoffee.com/moving home with Charlie or MHWC. I think both work.
That was great fun, Charlie.
It was great fun. It was great fun. Thank you all for coming along. I hope you enjoyed that too. I hope that we will see you on the next one.
Thank you, guys.
Thanks for coming. Sorry it was unannounced, but hey, still had a good turnout. You're brilliant. Love you all, and lots of love and luck. And let's see what happens at Bank of England tomorrow with the base rate. And remember, disregard the guff. Get out and view. And if you're a seller, never sign a long-term sole agency lock-in agreement. Never.